The title of lesson 7 is Golden Level. At the end of this lesson, we should be able to identify golden level. We should be able to possibly detect price action at golden level. What is golden level? Golden level is a price level. That is, it's a price level where it has previously acted as support and resistance. In other words, it takes a flip between support and resistance. It's a point where support turned resistance. Looking at the illustration on the screen, price rallied to resistance, met with a barrier and was rejected, which made price to retrace, and on the second reaction at resistance level, price broke the resistance to create a higher resistance. Price retested that previous resistance. Now I want you to pause at this level. Price retested the previous resistance. Now that resistance is giving price a basement, a floor, a support for push up. So that means the resistance has turned support. That the price level where resistance turned support is known as golden level. Golden level, the levels are seen on chart. They are levels that attract price, and we watch the golden levels on the chart for possible trades. So golden level is a very strong and reliable levels that we watch for possible trade. They are stronger than ordinary support or resistance. Once a golden level is established, most likely price will come and retest it, or there will be a reaction at that level, and we can take advantage of that for placing high probability trades. Let's go on to charts and see golden level and how important they are to determine where to place safe entry. Looking at the chart, I have three levels. Come from the top to bottom. Top, bottom, top to bottom. I have three levels. On the first level, we have 4 boxes. We'll explain what that is. On the second level, we have 3 boxes, and on the third level, 3 boxes as well. Now the first level, the first box represents a support level, and we can see the price was rejected and bounced up. It rallied after the support. Price came to that support again the second time, as you can see indicated with the box, and the support too was holding. Price also rallied. Then the third box, we can see how price acted as resistance. So at that point, we've seen a switch or a flip between support and resistance, and that made a golden level, and that was an established golden level. Now looking up to the far right, the fourth box, we saw how price rallied to the golden level, and at that point we saw a very good and aggressive reaction. There was a rejection and price dipped. Okay, price dipped. Now it is advisable or very safe to place a sell order at that level, to sell Okay, once we have order confluence, sell can be initiated at that level, and that is high probability trade, and that is what we are always looking for. Let's move on to the second level. The first boss on the second level is a resistance level, and price moved again. The second level is a support, okay, and that is a flip between support and resistance. Then the third level indicates a support. Once the golden level has been established, of course it was established when there was a flip between support and resistance, and the next point of contact of the golden level, we saw reaction. The golden level acted as a strong support for price to rally. The same thing the third level, and that is how we play with golden level. They are very strong. The levels are very strong, stronger than support or resistance, and we can see how price has been reacting at the levels. They are golden. Once we could play them very well, I am sure that most of our trades will be successful. Actually, it requires patience. On our chart, what we do is to locate this golden level and watch price action at the golden level. In further discussion, we will teach how we use everything that we've taught, including this, to do what? To decide when to trade, and how they shape our thought process. Identify golden levels on the chart. The first we have to do here is to locate a support and test if it has acted as resistance in the past. Once that is established, then we have a golden level. There are several golden levels on the chart. Can you identify them? Golden levels identified. We have 4 levels on this chart, or more than 4, but we can see 4 as identified. The first level, top down, we saw the 2 resistance, then followed by support, and price has been bouncing on that level. Initiating long position at that level would be most likely a profitable trade. The second level, the third level, and the fourth level. The fourth level is at 114.83. So 114.83 is the golden level. We saw how price acted as support and resistance to establish the golden level, and we could see immediately after that we saw 3 rejection and a dip. At each rejection there was price movement of about 200 pips. That's amazing. That's amazing. And the third rejection we got a dip, and that's how important, how reliable golden levels are to our trading. I can't do without them. You should identify these levels on your charts. And another thing that I want to advise is it's good to identify these levels on higher time frame, daily time frame, weekly time frame. They are more reliable on this higher time frame. In my trading experience as a forex trader, I've seen that the higher the time frame, the more reliable the signal, the entry is. We're moving on to another section I call DRF, daily reversal candlestick formation. Daily reversal candlestick formation. Looking at the charts, we've observed over time that there's a candlestick formation that is so unique, and once they are found at certain level, most likely they will reverse a trend. We've seen them over the years across currencies, and we've seen that they are very, very reliable. Once we spot them, we are sure to high level of certainty that the trend is going to change or is going to pull back for trend continuation. What is DRF? This is a unique and special candlestick formation. It's a special candlestick reversal formation. Once it appears on daily time frame, will most likely mark the beginning of a retracement or reversal on lower time frame. They are more effective when they are either located on swing high or at key levels. So what we are saying is DRF is of importance to us at daily time frame. We don't look at DRF at lower time frame. Once we see DRF at higher time frame, we have this assurance to a high degree that a trend is going to reverse, or there's going to be a pullback as a result of that candlestick. It's an amazing reversal candlestick that we've seen over time to be very effective. DRF structure, bearish. How do we determine a bearish DRF? A bearish DRF is normally seen in an uptrend at the top of uptrend. Bearish DRF has a higher high and a lower close compared to the previous candle. What we are saying in essence is, for a candlestick to be bearish DRF, it has to be compared to the previous candle, and once the two criteria are met, then it is a bearish DRF. Let's look at the first example. We have a decision bar, a bullish candlestick, which is a decision bar, and an indecision bearish candlestick. Okay, now the bearish candlestick have a high that is higher than the previous candle, and it closed lower. That makes it a bearish DRF, and if it is spotted at the top of a trend or at Q levels, most likely the trend is going to reverse. DRF, it's a good candlestick formation that determines strength or weakness of a trend. Looking at the second example, we have two decision candlestick, bullish and bearish, but the bearish have a high higher than the previous candle, and it's closed lower than its close, giving what we call a bearish engulfing. But this is more powerful because the high is higher than the previous high, and that makes it what? A bearish DRF. The bearish candles above are good examples of bearish DRF because they have higher high and lower close compared to their respective previous candle. This is examples of bearish DRF as seen on the chart. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have 12 bearish DRF on this chart, and once they are located at the top of a trend or at key levels, most likely it's going to reverse the trend. Once again, DRF, bearish DRF, is normally used to dictate the weakness, to determine the weakness of a trend. Once a trend is bullish and we are seeing a bearish DRF at the top of a trend around key levels, most likely 80% of the time the trend is going to reverse. Identify bearish DRF on the chart. Identify bearish DRF on the chart. We have so many bearish DRF on this chart. The first thing you have to note is this: a bearish DRF must have a higher high and a lower close. Once the two criteria are met, then we have bearish DRF. Highlighted are bearish DRF. There are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 bearish DRF on the chart. 10 bearish DRF on the chart. The next to be discussed is bullish DRF. Bullish DRF is the opposite of bearish DRF. They are very good at the bottom of a trend, and when they are seen around key levels, most likely is going to reverse the trend. The candle low of the second candle must be lower than the first candle, and its close must be higher. That is, it must have a lower low and a higher close. A bullish DRF structure, it must have a lower low and a higher close. For a candle to be bullish DRF, we have to compare the candle with the previous candle, and if it meets the two criteria, then it's a bullish DRF. Looking at the first example as seen on the screen, we have two indecision candles. Okay, the first one is a bearish indecision candle, the second one is a bullish indecision candle. Now the second indecision candle has a lower low, that is, its low is lower than the previous low and its close above its close, making it a bullish DRF. And the same thing is seen on the second example: a higher close and a lower low. The blue candles above are good examples of bullish DRF because they have lower low and higher close compared to the previous candles. DRF bullish. This is a chart illustration of bullish DRF. We have 1, 2, 3, 4, 5. 5 bullish DRF as indicated by the arrows. And for each of the DRF, we'll see how the trend was reversed, and can see is a retracement, and after the DRF we see a trend continuation or reversal. That's how strong, how reliable these candlesticks are. Identify bullish DRF on the chart. We have several bullish DRFs on the chart. Can you identify them? One thing that needs to be noted is a bullish DRF must have a lower low and higher close. Can you identify them? Highlighted are bullish DRF. there are 1, 2, 3, 4, 5, 6 bullish DRF on the chart, and for each bullish DRF there is a trend change, trend reversal, or beginning of a retracement.